So let's just talk a bit about how the tiebreakers work. So step one, when you're looking at treaty residence and who and where your treaty residence is an assumption that you're resident in two countries.
Not always, because occasionally you can look at it to determine just whether you can use the treaty to provide the relief. And so normally within the residence article, it will start with this is what the criteria of being considered resident means for each particular treaty. And then normally what will happen in terms of that residence article, and I say normally because I know of at least one, the UK-Greece double tax treaty.
Yeah,
there are exceptions.
They follow the OECD often, but then the Greek one is what, 1953, I think it was brought in, something like that. So it's very odd.
That basically says if you are considered tax resident in both countries, disregard the double tax treaty. Yeah. But the majority of them will then have a set of tiebreakers in terms of determining where you are considered to be resident for the analysis of the rest of the treaty. And normally the order will be, where do you have a permanent home available to you? So I suppose it's fairly clear if you have, I don't know, left the UK, sold your home in the UK, you've bought a home in a different country, and you return to the UK only short term, you stay in Airbnbs when you're there, you don't have any sort of home in the UK, it would be pretty clear cut that your place of residence is the country which you've moved to. But in certain instances, for example, we get quite a few people who maybe have left the UK in order to work outside of the UK, but their families remained in the UK, especially if they're going out to the Middle East. And in those instances, because their family has remained and they've got a permanent home still in the UK, you have to weigh up though, well, do you have a permanent home in the other country as a starting point? Quite often, if you then have a permanent home in both countries, you would then look at where your cultural and economic ties or your centre of vital interests are closer. So again, if you've left the UK and you've taken your family with you, your work is no longer in the UK, it's in a different country. If you've basically cut ties to the UK, then generally the cultural and economic ties are going to be closer to the country you've moved to.
And an interesting one there is that it's important for people to realise that it's not like a one-time decision. It changes. So you could be in that situation, you could leave and have your cultural and economic ties being very much in the UK still. We've been helping a client recently, Henry. Him and his wife are moving to Portugal. At the moment, their economic ties are much closer to the UK, and they're maintaining their home in the UK. But in the future, they expect to move more of their life over to Portugal. And at some point, you probably look at it and say your economic and cultural ties are probably closer to Portugal. So it's a movable feast.